What's going on, everybody? It's your boy C-Zar, and the purpose of this video that I've made for you today is to discuss some of the major talking points that have developed for the crypto markets over the past, week or days or today. We're going to talk about some of the hotter topics in the markets that are circulating right now, and prepare ourselves for the coming days and weeks ahead. I'm going to give my perspective on some of these articles that we're going to go over today, and I don't know what value my perspective has, but I've been in crypto since 2015. I have a little bit of experience in the markets. This is my third bull market, and with that being said, I want to carry that experience into my perspectives that I'm going to offer you. Hopefully, we can all come out of this video a little bit more prepared and understanding for the days and weeks ahead that are coming for the crypto markets and as they pertain to the crypto markets. So if that sounds good to you, hit the like button, subscribe. Let's get into it. Okay, let's just dive right in. Here we are. The first article that I'd like to go over is this one from Yahoo. There's new tax guidance on crypto, and here's why that matters. And it's actually pretty cool. I think this is a necessary step forward to allow crypto to really blossom the way it is. If this doesn't go through, it will go through inevitably. It has to. Either that or crypto's not going to be in the United States, you guys. And Donald Trump, who's president for another 3 years or so now, he wants the United States to be the crypto capital of the world. That's what he said. And J.D. Vance, who's his VP, he could be the next contender, for the next election. He might want to carry out this legacy of the United States being the crypto capital of the world. Certainly not the same condemning administration we had most recently that really did condemn cryptocurrency. But let's not talk politics. Let's talk about this, okay? I'm just saying, key takeaways here. Bitcoin treasury company Strategy said in a filing that it no longer expects to be subject to the 15% corporate alternative minimum tax it's anticipated having to pay next year. So what is this? What's this mean? So if we read this here, why this news is significant. This has to do with the Financial Accounting Standards Board, which changed accounting and disclosure requirements for cryptocurrencies in December 2023, saying companies should measure them at fair value. So if Coinbase, an exchange, a company, if Robinhood, if Strategy, a crypto, what's the word, treasury company is holding coins, but they haven't sold them, they have to pay taxes on these coins. And the whole purpose of a company like Strategy or Coinbase is to be a institution that holds crypto, doesn't sell crypto, right? But if your cryptos are going up in value, you're required to pay taxes on that because they recognize that as net income for each reporting period. That allowed companies like Strategy to start reporting paper gains on their Bitcoin every quarter, but also made them subject to CAMT, which everybody was saying this is really cool that they can report their paper gains every quarter, but now they're required to pay this tax. Strategy and Coinbase in May asked that the IRS exempt digital assets, saying it could force some companies to sell assets. Exactly, where the whole purpose of the company is to acquire these assets, right? In exchange, the purpose is to have assets available for their customers to buy. A treasury company like Strategy, the purpose is to acquire Bitcoin. They don't sell it. Michael Saylor doesn't want to sell any Bitcoin, and if he's putting all of his money into Bitcoin, he doesn't want to sell any Bitcoin to pay off the excess gains tax that they have to pay. Anyways, saying it could force some companies to sell assets just to pay the tax, and complaining that they're being subject to CAMT was the unintended result of a basing tax liability on decisions by a private organization that is focused on financial statement accounting standards, not principles of taxation. So again, just referring back to, you guys remember whenever it was a big deal that Strategy was able to report their paper gains on their Bitcoin every quarter because that affected earnings, so they were able to do that. Unfortunately, the unintentional consequences of that were some taxation, and that wasn't the principle of the idea. So they're trying to work that out. I think it's going to go through. I think, and if you guys heard the Senate hearing where they were talking about the taxation of digital assets, it sounds like there's some very friendly guidance that's going to be offered. The nobody who cares what their names are, they were trying to promote a different idea, but there were a lot more people, it seemed, that were interested in cooperating, a bipartisan kind of agreement where crypto can blossom and really benefit the community, the country of the United States, and anybody who's participating in this. So I think it'll go through. I think it'll all work out. And that's great. That's great because, froze. The less taxes that go toward the IRS, toward the United States, the more money these companies can put into crypto, into their infrastructure. That's great. That's a positive thing. And they're not selling their assets to do so. That's very I know that MicroStrategy, with a 15% corporate alternative minimum tax that they're not having to pay, they're probably going to put all those funds into Bitcoin. Anyways, moving on here. Walmart backed fintech OnePay is bringing, and it's Walmart backed. Fintech, or OnePay is its own thing, but it's backed by Walmart, bringing crypto to its banking app, which is pretty cool. OnePay is going to be bringing crypto online using with help from Zero Hash here, according to people with knowledge of the matter who declined to be identified. So these are some insiders who leaked this to CNBC. The move shows that OnePay, founded by Walmart and venture firm Ribbit Capital in 2021, sees crypto as core offering as it builds out its everything app for digital finance, right? They want to have an everything app for digital finance. You want to have that OnePay. You want to be an everything app. You need cryptocurrency. Walmart, of course, one of the biggest companies alive with some of the wealthiest people in their family, right? Backing this, that's pretty cool, right? That's actually pretty damn cool. By allowing OnePay users to hold Bitcoin and Ether in their mobile app, customers could presumably convert their crypto into cash and then use those funds to make store purchases or pay off card balances, which I think is kind of weak. We're almost there, but why is this? Why is there this? You can buy crypto, but now you can also sell it to use your debit card, right? Like why not come up with some kind of way? And I'm giving away a really good idea here that I want to use for myself, but damn it, I'm sure there's already people in the works of this, but why not develop a way where you pay the retailers, you actually give them an incentive to use your app. You actually, instead of them paying you for every transaction, you pay them, and then you can use the cryptocurrency, right? And you pay them off later. It's kind of like a debited form, but your customers, the people like OnePay, they could have their customers use crypto as a payment, and then you, the company, the facilitator, instead of them selling their cryptos, they can just use crypto as payment. You, as the facilitator, you can take their cryptos and pay the US dollar amount. You can do that in a separate transaction, kind of like how Visa already debits it. And I know that this is a step away. We want peer-to-peer cash to just go from point A to point B without any third-party intermediary. But this might be a way to start getting people to accept crypto. I don't know if that makes sense what I just said there, but not that this is. I think this is kind of dumb. Just that you can hold Bitcoin and Ethereum in your mobile app and then sell it if you want to pay with your debit card. Yeah, I mean, that's cool enough. It's a step forward, I suppose, right? You don't have to go from your exchange to your bank account and then into your, it's all just in one. That's a step forward, but we're still not getting there. The benefit is really going to come in when we can use crypto directly to buy your groceries, directly to pay for your coffee, directly to pay for your Uber. That's the thing. Can't you use crypto to pay for Robotaxi? I can't remember. Crypto companies continue to go mainstream. I don't know if I sounded like a madman there or not, but I hope I made some sense at least. This article here, three reasons why Solana is a better crypto to buy than Ethereum. Now hold up, you guys. I want to just say first off, we're gonna do a little bit of charting on this after I read all this, okay? But I think Solana might actually be Ethereum is going to overperform Solana between now and the rest of the cycle. That's my thoughts. Just letting you know. But we're gonna go over some stuff that might be interesting, might not be interesting, some revealing stuff, right? Reason one, Solana is a smaller blockchain. That doesn't sound like it's better. It's smaller, but it's faster, cheaper to use. No. Reason one, users, and I just think that's funny. Solana is a smaller blockchain. Like, what are you, yeah, the sky's blue. What user and app revenue are concentrating on Solana? Good investments have durable driver value. To find that durable value in the context of crypto, you want to look for a blockchain that people are willing to use. So there's more users on Solana, right? Solana matched the combined monthly active wallet addresses of all other major layer 1 and layer 2 blockchains. Matched of all of them. So which ones, I don't know, but that'd be Ethereum and others. Ethereum posted 7 million in that same period. So 127 million active addresses versus 7 million. So I went and asked Grok. I said, who has more users, Solana or Ethereum? And you can see weekly active addresses, Solana 14.2, Ethereum 2.8 to 3.5, mainnet only specified. So there's others that are not on the mainnet as well. But daily active addresses versus Ethereum's daily active addresses, sure, there are a lot more Solana users than Ethereum. So I asked the next question. How many addresses for Solana are assumed to be bots? Use a percentage. 86% of Solana's active addresses are assumed to be bots. based on data showing over 86 million of the roughly 100 million monthly active wallets hold no soul. They got no souls in those wallets, man. Often cited as a key indicator of bot driven. So, and it's no secret. Even Ethereum, right? There's bots on every chain. It's inevitable. There's bots on Twitter. There's bots on Facebook. There's bots on all kinds of things, you guys, right? But 86%, that really takes away, in my opinion, that takes away from this point number one, that users and app revenue are concentrating on Solana. What was it? I was also asking, what are the revenue differences of Ethereum and Solana here? Solana did 1.25 billion in total network revenue, while Ethereum only did 523 million in total network revenue. But the reality of the matter is the larger chains are, or at least there are more of these larger layer twos that are on Ethereum. There's more going on with these bigger companies on Ethereum than there are Solana, at least at the moment. Solana leads by that much, 139% more. This gap has widened throughout 2025. But the primary reason for this is because of meme coins. Meme coins. So think about it this way, right? If Solana is the better coin than Ethereum, but it's only because of the meme coin traffic, because of all the revenue that Pump Fund is generating and other things like that. This is not a solid market, right? Meme coins are very shifty. They don't care. They don't care. They go where the attention is, where the money is. Right now, it's shifting from Sol to BNB. And then BNB, how much of those funds are going to go into BNB chain now? How much revenue is going to be had by BNB chain instead of Solana? If most of your revenue is being made from the meme coin markets, that's great. That's good for you. You're making a lot of that's awesome. As a project, you're making a lot of money. But to maintain that and to keep you to stay as like the king of the memes, it's going to be difficult to do, and we can already see that, right? There's some shifting in momentum from Solana to BNB right now, and there's a lot of competition gearing up between Base, between Plasma, between Aerodrome, what other Sonic? There's all kinds of blockchains, Arbitrum. There's all kinds of blockchains that are trying to, or different chains, layer twos, layer ones, that are trying to create their own niche in the meme space. Tron, TRX, right? Like, it just wait until the market balances out and it's not all concentrated on Solana. This idea that the revenue is larger on Solana, it might go away. Maybe not. Maybe I'm just a hater. But we'll go over some other stuff. More smart contract utilization. Yeah. But again, that might be from the bots. Higher throughput. Now, this is the one thing, point 3, that I won't disagree with, right? I actually do think, and that's something that Solana has a lot more effective than Ethereum, is that there is a higher throughput, which allows for higher scalability, which is very important. It is very important. Now, Solana has shut down before with high traffic. We have seen Solana shut down. We've never seen Ethereum shut down with high traffic before, but we have had high fees. So high that it just really isn't feasible to use Ethereum in these high traffic moments. But at least you can use it versus getting shut down. Now, Solana hasn't shut down in quite some time, but in theory, even if it was to go through high traffic, they'd be able to handle it at this point in time. But that's the one thing that they have, which Ethereum definitely has to work on their throughput in order to be more scalable. But I just wanted to piece on that before we talked about Solana price prediction. World's largest derivatives exchange, ICE Sol. $1,000 Sol is just the start. So price prediction, they're talking about $1,000 Sol, but this article really isn't even actually about the price prediction. It's about the fact that the world's largest derivatives exchange, the CME group, is tapping Solana for round-the-clock futures and options trading, fueling bullishness for Solana price predictions. So what does this mean? This means that Solana is going to go on to CME, right? There's Bitcoin, there's Ethereum. They're looking to put Solana on there, and probably others as well, right? Platform is set to expand its derivative offerings to altcoins beyond Ethereum and Bitcoin. Oh, I didn't mean to do that. I didn't. Oops. Oh no. I didn't even mean to click on that. What are the odds, man? I'm like highlighting this, and then I click on the one thing that'll send me somewhere else. Beyond Bitcoin and Ethereum, with Solana and XRP among the first to become available on October 13th. So on October 13th this year, I'm assuming, CME is going to have futures trading capabilities round the clock for Solana and XRP. That's kind of scary. We're going to go over why that's scary here in a second, actually. Okay. This places Solana among the first in line to receive exposure to the world's largest derivatives market beyond traditional U.S. trading hours in early 2026. That's pretty cool. That is pretty cool. But wait, if it's going to available on October 13th, but in 2026, I don't understand. I don't understand. Maybe they're just doing 24/7. That's what it is in 2026. Yeah. Oh, okay, that's what it is. So they're going to make these available on the 13th, but then it'll be 24/7, not just traditional hours. They're going to do 24/7 in 2026. That's pretty cool. That's pretty cool of the CME group, and I think that's a big deal. I think that's actually a really big deal. Press release cites record volumes in crypto futures and options this year. Yeah, of course. Instead of why limit yourself? Why do 5 days a week when you could do 7? Why exclude holidays when you could do holidays and still make money on that and have it as an automated system? Crypto's great. So the reason why I'm a little bit intimidated by these CME futures coming out for Solana and XRP is that what I have here is the Bitcoin chart. And it looks like you've got the Bitcoin chart, right, all-time history with another Bitcoin chart on it, but it's not quite that simple, okay? Bitcoin, this is the Bitcoin price, okay? This is BTC price, BTC USD, and the red line here is the CME futures. Now, why does it stop right here? Why doesn't it go back in time? That's because the day that the CME futures came out for Bitcoin, BTC, was the day that the bear market began, right? This is that 2017 last great alt cycle that we had, was 2017 here. That was the beginning of the bear market for Bitcoin. As soon as, not even within a freaking whiff of a doubt of a day, as soon as CME futures came online, that's when the bear market began. Now, of course, as it's gone on, these futures gaps have helped us in trading and stuff like that, and it's definitely a significant part of crypto. There's a lot of volume that goes into that. It's a big deal being on the CME group, but that's kind of scary, in my opinion, right? We look at ETH. I'm actually kind of curious. I didn't even think to go this far. Hopefully we get some good news. Hopefully this is different. But let's look at ETH, and then we'll do, instead of CME Bitcoin, let's do ETH futures. ETH, don't we have ETH futures? Right here, Ether futures. Yeah, right there. Okay. All right, so here's a benefit. Nice. Look at that. We got listed and we still had more bull market to go. However, do you guys see the one thing that I'm going to point out here? Do you see it? Once we listed, you did see a massive drop. You did get a pretty sizable drop here. What did we get? How big of this? And I would attribute this to the CME futures listing. That was a 30% drop, guys. 36% drop. We're on a daily time frame here from the listing, right around the listing, and we were toward the end of the cycle. We're around the end of the cycle now, but what I like about this is that this did not generate a bear market right off the bat. That's encouraging. It did it for Bitcoin, but we were at the height of the market, right? And that was the first like shorting that was really offered for Bitcoin. This is like the time before DEXs and everything, man. From this day, the 20th of February to the 25th, like less than a week, you dropped 36%. So again, with that being said, if there are CME futures that are going to be listed for Solana and XRP on the 13th of October, maybe anticipate some volatility. Not on the day, right? These futures listed here on the 5th of February, and we didn't see a drop happen until about 2 weeks later. But maybe the end of October, maybe the beginning of November, in this same kind of idea, maybe right on the day, who knows, do expect some volatility. This will likely generate a massive, what's the word I'm looking for? Inflow for Ethereum, or for XRP and for Solana. It'll generate a lot of hype, and those are the moments where you need to sell, not where you need to be buying, okay? And Solana and XRP being some of the largest cryptos in the space, if they get some volatility, guys, that could mean that we're going to see volatility across other cryptos as well. It's not just these two, right? If Solana and XRP are shaken up, the rest of the market might follow suit. Anyways, moving on. That one was a long one. Lighter, which I want to throw this on here. We're not going to spend too much time on this, but Lighter launches Ethereum Layer 2 mainnet, which is pretty cool. Lighter is just like Aster or Hyperliquid, but it's different. It's better. And Bitcoin.com news is advocating for them. That says something to me. These guys, I really like their perspective on a lot of things, and they don't talk about something if it's like a scam, if it's BS, it's not worth getting involved with. What I like about Lighter, I've got it pulled up here. is that, and I don't have my VPN on because when I have it on, the computer's slower. So I just turn it off whenever I'm making the videos. But with this, you've got access to virtually everything that's on Hyperliquid and more. And you've got actually higher limits. So with BTC, not that I should encourage leverage trading, not that anybody should, but with BTC on Hyperliquid, it's a 40x maximum. And for Ethereum, it's like 25. Here you can do 50x if you want to. Hype, you can do more. Right? You can even do more X's on leverage here than you can on Hyperliquid. And they've got all kinds of different coins to do. Let's see, what was Trump there? Trump's 10x. I think Trump's 10x on Hyperliquid. Maybe it's 5x, but that's pretty cool. Just higher limits and stuff like that, which might actually not be cool. That might be dangerous. But a decentralized perpetuals exchange, and there's no token associated with it as well. I think that's pretty cool. I think it's better to not have a token associated with it, honestly, because then there's just less reasons for people to panic or not use you. If your token goes to crap, you might be inclined to not use the protocol, if that makes sense. And you don't need the token to have benefits. So actually, check this out, you guys. There is where is it? According to the X post, the protocol offers low cost, low latency perpetual trading, powered by custom zero knowledge ZK circuits. Wait, where is it? Hold on. Let's see. From 100 traders in beta, now 188,000 unique accounts. Where was it? Okay, this is what I thought was really cool. Retail traders using the front end, what we were just looking at there, can continue trading without fees. You can trade without fees. While API trading, market makers, and high frequency trading are now subject to fees, but very low fees in comparison, right? I think that's pretty cool. Looking ahead, the team says it plans to expand composability with Ethereum, DeFi, and Layer 2 ecosystems, reinforcing its push to become a core player in the on-chain derivatives market. Lighter, you guys. Lighter. I will be... Oh, man, I shouldn't say it. I will be trading with Lighter. No longer will I use Hyperliquid or Aster. I actually will probably exclusively use these. But that's not me endorsing anybody. It kind of sounds like it, though, doesn't it? I feel like that sounds bad. That's not normally what I like to promote. I don't like to promote leverage trading on this channel. I don't think anybody should leverage trade. I mean, unless you have a proven track record of success and that goes more than just one trade, that's more than just 1 week, that's even more than just 1 month, 3 months. If you're trading, you're doing, I don't know, multiple trades a week for 3 months and you have a proven track record of success, you don't have to day trade, but just something like that, then I would say, okay, fine. Don't let me convince you otherwise. But most of you probably just stay away from trading. We're talking about Lighter because I think it's cool. I think it's a new product, which is also very interesting. And then anybody who's using Hyperliquid or Aster, maybe check out Lighter, because I know that there's a lot of people who do use those, and maybe check these guys out instead, because it's promoted here by Bitcoin.com News, which I think is a very credible source. Anyways, I don't want that. Moving on. Who is Mike Selig? New CFTC chair frontrunner. Hey, that's pretty cool. We could use a guy like this in the CFTC. And we have, what's the guy's name? Why can't I think of his name? The guy that's in the SEC. Hold on, we can scroll down here. He's actually his number 2. Let's see. It's not Atkins. What's his name? Is it Atkins? What's his name? Hold on. Yeah, no, it is Atkins. Okay. In addition, he currently serves, so this guy currently serves as the senior advisor to the SEC chair, Paul Atkins, who was put there, right, in this new administration with Donald Trump, put there specifically because he said he would take a crypto-friendly stance and put a task force together to regulate crypto in a proper and fair, clear environment so that we have regulatory clarity. This is his senior advisor. So you got the SEC chair, Paul Atkins. His senior advisor is this guy, Mike Selig. It was going to be somebody else who's going to be in charge of the CFTC. It was Brian Quintenz, who apparently the Winklevoss twins did not really get a good vibe off of him. And Tyler and Cameron Winklevoss are 2 of Trump's most vocal supporters in the industry. I'm sure that Trump listens to them whenever it comes to regulatory advice on cryptocurrency. Trump does what he wants to do, and his administration does what they want to do, but I'm sure they take these guys who are very smart individuals and have been around in the crypto space for a long time. They probably take their words to heart, and it sounds like they had a little bit of a spit spat with Quintens, and it looks like Quintens is no longer the front runner for this CFTC chair position. So the CFTC is charged with regulating futures for commodities such as oil and wheat, right? Just like the SEC is charged with doing the same thing, but for securities, CFTC is charged for that for commodities. Well, there are a lot of cryptos that are kind of defined or identified as commodities, not as securities. So that's a big deal. That's a really big deal. You want a crypto ally in this position, okay? That's a big deal. Net positive for crypto, you guys. This is great. This is great. This is good news. This is good stuff. Mike Selig, we want you in there for sure. XRP. Is XRP the smartest cryptocurrency to buy with $1,000 right now? I'm not going to read this article. We're not going to go too in depth on this because I really want to focus on the headline because it actually sparks a really good thought. And there's a difference between what's smart and what's safe. I would say absolutely not. Is putting $1,000 the smartest cryptocurrency? Is XRP the smartest to put $1,000 into? No, because the smartest one is the one that's going to make you the most money. Is it the safest one? You know, and which one's the safest crypto? That might not be easy to say. You know, is Bitcoin the safest? Is Ethereum? Is Solana? Is XRP? Is Bitcoin Cash? Is Monero? What's the safest crypto? You know, most people I think would say Bitcoin. I don't think XRP is the smartest crypto to put $1,000 into, but I think it is one of the safest cryptos to put $1,000 into. Do you see the difference? This is the whole purpose of this article, the headline here that I'm trying to distinguish is that there's a difference in investing. A lot of us think that we're looking for the smartest play. But for a lot of us, I think it's actually best to look for the safest play. The safest play, and I know that sounds contradicting to some degree, right? Let me elaborate. Safe can be smart. Smart does not necessarily mean safe, though, right? Safe, in fact, is oftentimes smart. The safest moves are some of the smartest moves. But if you have an investor who's investing in the top 5 cryptos, and they, you know, Bitcoin, XRP, Solana, Ethereum, BNB, and likely if you're fully allocated in your portfolio to those 5 cryptos, likely you're not going to outperform the average altcoin in the market. Is that the smartest play? No. But it is the safest play. And it is a smart decision, and you will make money. It's not a dumb decision. It's just the safe decision. Where the smartest play might be putting your money into a random meme coin that you've done your research on. You've dug through the trenches. You see like Mirage. You see this thing. It's going to be the next SPX 6900. You see it before it happens. A little bit of luck never hurts either, but the smart decision is what makes the most money. So that's something to think about going forward. Don't let these headlines trigger you, right? What's the smartest move? It's not the smartest move. XRP, I can tell you right now, I love XRP. I think it's going to do great. I even think it's going to outperform the average crypto, but it is not the smartest move. It's a very smart move. It's a very safe move. But compared to the smartest move, I would say XRP is a lot safer, but there's a difference. I don't know if that makes any sense, but just a thought, a little provocation there to generate some thoughts in your own head, to not look for necessarily the safest cryptos, but the smartest cryptos, or maybe depending on who you are as an investor, look for the safer cryptos. Don't look for the smarter cryptos. Does that make sense? Safe and smart can be one and the same, but smart and safe are not always the same. In fact, the smartest plays, the best plays will probably not be the safest plays. Plan accordingly, right? Invest at your own kind of discretion there. This one here, pretty cool as well. We're not going to go into the article too much, but stablecoin market, boom, to $300 billion. It's rocket fuel. Why is it rocket fuel, you guys? Why is it rocket fuel? The record 300 and growing, by the way, 300 billion rocket fuel for cryptocurrency valuations, according to market analysts. Like who? Give us a name. Don't be afraid. Don't be shy. Total stablecoin supply has reached a new record. Yes, you already said that. Marking a 46.8 year-to-date growth rate. That's awesome, you guys. That's crazy. Why is this so important? Why is this so important? Because if you're, let's put it this way, okay? Let's say there's 100 quintillion dollars in the world, or maybe there's like $100 trillion. I don't know. Cash and dollars that are just stored in your bank account. What percentage of that do you think is going to get invested in crypto? Inevitably, all of it at some point, sure. I mean, there will always be physical cash. If you don't think there'll always be physical, I mean, maybe not always, but in our lifetimes, anybody watching this, you're going to die and cash is still going to be a thing. If you don't believe me, that's okay. We can agree to disagree, but that's not the point. The point is how much of that physical cash and otherwise digital in your bank account, right? Because not all that money you have in your bank account, you got $1 million in your bank account, they don't have that full amount of cash in the bank. I mean, maybe they do depending on which bank, but it's either digital or physical cash. How much of that's not on crypto exchanges or not in stable coins do you think is going to get invested in crypto? Probably like less than 10%, right? Probably. With stable coins, with a record-breaking amount of stable coins, $300 billion in stable coins, how much of that do you think is going to be used in the crypto markets? And probably forever. It's probably not going to get put into cash. It's just going to get shifted into other cryptos and then back into stable coins. 100% of it, if not a great majority of it, like 80, 90 plus percent of it, of these stable coins, they're not going to be transferred into cash. They're going to be transferred into crypto. That's a big deal. That's why it's rocket fuel, because $300 billion, you guys, record-breaking statistics here. This is just a stepping stone. We're going to hit 3 trillion, 300 trillion at some point. It's going to happen. And at that point, we're going to basically envelop the world in crypto, but it's all going to get tokenized. This is cool. This is a step in the right direction. We're watching history happen before our eyes, literally. Moving on to some of the things that are not as fun, right? I thought I had 2 articles based on this, but more victims fall prey, maybe, to crypto scams. But there's hope. I don't know what the hope is. I don't really care to read it. I hope that there's hope for some people, but resident lost $450,000 in a cryptocurrency scam. 2 Green Valley residents also fell victim to crypto scams. You guys, the purpose is not to read these stories, read their pity parties, and feel bad for these people. We feel bad for everybody. It sucks whenever you get your money taken from you. But the purpose of this is to, at least at this part of the video, is to make sure that you are securing your funds. How do you secure your funds? How do you avoid scams in crypto? First and foremost, keep your information private. Do not, if you're a millionaire in crypto, if you're a multimillionaire in crypto, you don't let anybody know. You don't let anybody, nobody needs to know. You got a buddy who's your best friend that you trust. Okay, cool. Your mom, all right, cool. Your stuffed bunny rabbit that you kept since you were 5, whatever. There's people you can trust, but you don't need the public. You don't need to be taking $100,000 this cycle or $1,000 this cycle and you turn it into $1 million or hundreds of thousands of dollars, then brag about it on social media and say, guess how much I made and guess what I did, trying to rub it in people's faces. Don't do that. Don't do that. You might have a lot of people, if you're like me, you might have a lot of people who are telling you that you're dumb or silly or too risky. You're not educated for investing in crypto. And whenever it pans out well for you, trust me, you're going to want to rub it in their face. You're going to be like, well, how did I make your salary in 1 month or 1 week? How did I do that? I'll give you one guess, right? But you don't want to say those things. You don't want to have people don't need to know how much money you have. Because when they do, you'll get someone like what happened. I forget what happened, who the guy's name was, but there was 2 brothers from Texas that went all the way to Michigan to kidnap a guy to steal millions of dollars worth of his crypto. They kidnapped him. They tied up his wife and his kid. And then they kidnapped him and took him to their cabin out in the country to grab other cold storage wallets that he had crypto in. This guy was so scared. How did these guys from Texas know that he had crypto? Because he was public about it. Don't be public about it, okay? You do not want this. This is why people ask me all the time why I don't talk about numbers, why I don't talk about how much money I have or how much crypto I have in my gains or investments, right? First and foremost, it's none of your business. Secondly, security. Why tell anybody? Why does anybody need to know? You think I'm a millionaire in crypto? Maybe I am. Maybe I'm not. You think I have $1 billion in crypto? Maybe I am. Maybe I'm not. But you'll never know. You'll never know. I will never. You can just assume all you want. Am I broke? Do I have $10,000 in crypto? You'll never know. Right? Just don't. And you should be the same way. Don't put yourself in a vulnerable position. Don't make it public, because a lot of these people, they put targets on their back without knowing it, right? And I, of course, being a YouTuber, a content creator, I put targets on my back to a certain degree, but I also am very private with my information. You have to use, and here's another thing, not financial advice, not a financial advisor, but whenever it comes to protecting your assets, use different emails. Wild concept. Have multiple exchanges. And for each exchange, have a different email, right? And each exchange with a different email have different passwords. And for all of them, if they're not double authenticated or more, what are you doing? You're asking for it. Make it a pain. It should be a pain in the ass to gain access to any and all of your crypto accounts from any new devices. It should be a pain in the ass. It should even be a pain in the ass from the same old regular devices. Because what if somebody gets the bright idea to come steal your phone or steal your laptop and they know what they're doing? Or other things. Make it a pain in the ass. Make it so that if they have one bit of information or access to your email or access to your account, they still can't withdraw your money. They can't withdraw your funds because there's all these authenticating protocols through different avenues that make it a pain in your ass, but it'll make it a pain in their ass too. And you would likely be well aware of what's going on before money ever gets taken away. So just this is the first time in history, you guys. This is the first time in history since currency became a thing, where banks became a thing, where it's not the first time in history. I should say it's a regression back to a point in time where we as individuals are responsible for our own wealth, where the banks are not our gatekeepers anymore. There's a safety, there's a certain layer of customer satisfaction that comes with banks, right? Maybe not if you're going to Vegas and they block your account, or you're in Cabo for the same reason, damn it. You have to call them and it's the weekend and you can't access your funds until Monday. That's annoying, right? It's your money, you need it now. But other than that, banks provide safety. They see fraudulent behavior, they're going to freeze your accounts and stuff. Nobody can freeze your crypto accounts. I mean, you can, but by the time you realize it might be too late, right? So if you're going to be in charge of your own wealth, there is a level of responsibility you need to be responsible for, okay? Let's move on. We spent a lot of time on that. I'm not trying to bore people. Hopefully I scared some of you. But I spent a lot of time on that because it's really important. You think crypto's just fun. Oh, it's just like gambling. It's just like the stock market. No, it's not. Because when you go to a casino, there's security guards. Nobody's going to steal your chips, and if they do, they got to fight through a bunch of security. You go to a stock exchange. You're going through a stock exchange, and people have to get your bank account. They have to get. There's all kinds of other stuff. With crypto, they can just send it from place to place, and nobody needs to know, unless you have several layers of authentication, which we all should, genuinely. Make it a pain in the ass. Make it a pain in the ass. You'll get used to it. It'll just be part of the process, and you'll be better off for it. Okay, moving on here. Why everyday transactions, not Wall Street? If you're hearing that too, please don't just roll your eyes. Like, please make it hard. You think you can't get scammed. You think you're not going to get played. You don't think you're going to get hacked. And then it happens. I guarantee you nobody who's been hacked ever thought they'd be hacked. You don't put these protocols into place because you think you're going to get hacked. You do it just in case. And hopefully it's a pain in your ass for no reason. You never have to worry about it. But trust me, in this digital world, it's gonna be hard. It's gonna be hard to decipher sometimes. Why everyday transactions, not Wall Street, will drive crypto adoption? I already know the answer to this, but let's read this together. The future of stablecoins lies in small, everyday payments, not in trillion-dollar bank deals. Absolutely, and that's basically why. The noise around Tether's astonishing $500 billion valuation and Hashkey's $500 million treasury fund are just the latest examples of the crypto industry's whale obsession, which has been ever present almost since the beginning. But this fixation has always been antithetical. I don't even know what that word means. What is that? Antithetical? It's not anti-ethical. What is? Let's look this up. Define this word. Antithetical. Directly opposed or contrasted. I mean, that makes sense, yeah. Mutually incompatible. Antithetical. Okay. I mean, that makes sense. But this fixation has always been antithetical to the founding principle of cryptocurrency. Right? Bitcoin and coins that followed in its wake, they were never primarily about size. Exactly. They represented self-sovereignty, freedom from financial censorship, and the baleful effects of inflationary money printing, right? Let's see. That's not to say size doesn't matter, but it's a classic case of looking down the wrong end of the telescope. The obsession with stablecoins as institutional rails or wholesale infrastructure misses the largest opportunity, which is low friction everyday payments for the next billion users, right? As much money is transacted at at multiple hundreds of dollars a day, or thousands of dollars, or millions of dollars, billions of dollars, there are much more transactions every day that are less than $20, that are less than $100. Most of us don't spend $100 a day. I mean, on average, maybe, it depends on the person, right? Maybe some of us spend less than that. Maybe some of us spend more than that. But whenever you're just having your bills paid and you're just chilling at your, like, there's days where I don't spend any money at all, right? There's days where I go to the store, like today, and I buy a frozen bag of fruit just because I needed that to put that in my daughter's oatmeal because we ran out of fruit. So I just went to the store to grab some fruit, and I'll have to go back because we need eggs too. So those two things, very microtransactions. Crypto can handle these transactions at a much more feasible and lucrative, cheaper pace than institutions can. Institutions, they handle big transactions and they take a small fee, but whenever they do this, it's expensive as far as the work that goes into it, right? With crypto, it's all automated. It's all cheap. It just happens. It's just part of the network. So this is very efficient and effective for crypto to implement these low friction everyday payments and stuff like that, right? And that's why a lot of people might think, oh, we need Wall Street for mass crypto adoption. No, that's not the case at all. Wall Street's going to have to defer to crypto inevitably because their constituents, their customers, their clientele is going to it's going to be much better. It's going to be much more effective as cash, as a form of transaction. Will there be banks? Will there be what's the word I want to look for? Organizations, centralized points of authority that help handle very large scale transactions? Absolutely. There probably always will be. But even those kind of transactions will be made more efficient and effective and secure with crypto. And I mean, inevitably, yes, that's a big deal. Being able to do like mergers or company acquisitions through crypto, very large amount, buying houses, buying whatever with crypto, that's going to be a big deal. But the biggest deal is not that stuff. The biggest deal is actually the microtransactions. That's the biggest deal. And that's the whole purpose of crypto. You want to send somebody a tip across the world, you can do it with crypto. You don't have to use YouTube. You don't have to use some intermediary that takes a portion of it. No, you can just do peer-to-peer, boom. Anyways, finishing this up with what I think is the biggest piece of this all right here. And I actually kind of wish that we started the video off with this, but how Ethereum's, because I'm sure a lot of you have left by now, how Ethereum's, hit the like button if you're still here. And if you already hit it, don't hit it again. It'll take the like away. We don't hit it 3 times if you hit it twice. How Ethereum's Fusaka upgrade could be a game changer, asset manager, Van Eck explains. So for those of you that don't know, Fusaka is essentially an upgrade to Ethereum that's supposed to help with its scalability, specifically pertaining to like layer 2s and stuff like that. It's supposed to absolutely update the system, and it does it in a way where instead of the nodes or the validators validating every single transaction, it's like what do they call it? Let me see here. We actually, let's see. Lower transaction costs for end users as more activity shifts to rollups, according to Van Eck. Yes. Ethereum's next major upgrade, Fusaka, could reshape how users experience the blockchain by lowering costs and boosting efficiency. In its September crypto market recap, Van Eck's research team said Fusaka, which is expected to go live in December. You guys, Fusaka, wait. Oh, yeah, okay. Fusaka is expected to go live in December. Ethereum, let's delete those. Ethereum here has been pumping a good bit so far this cycle. I wouldn't be surprised if a lot of this pump is in relation to Fusaka, because this is not new news. But I would expect that we pump going into December, right? However high we go, we're at $10,000, whatever. And then once the Fusaka update comes out, we probably dump. Typically, that's what happens. Not financial advice, not a financial. In fact, I'm kind of curious, when did ETH's EIP, is it 1559 come out? I forget what it was. What was it? The update, the massive update. Was it that? August. Okay, it was. Wow, I can't believe I remember that. August 5th, 2021. Let's look at that, because that was a massive update. A lot of people were heavily anticipating. August 5th, 2021. Let's just see what Ethereum did during August 5th, 2021. So here we are, July, August 5th. Okay, so you kind of, is that right? Were we on the right date? August 5th. Okay. Not what I was expecting, but you were just kind of moving sideways. You're just kind of moving sideways. You did pump, but then inevitably dumped. So you pumped probably because the update went well, right? People were there were no hiccups. That's great. And then you dumped afterwards probably because at that point it was priced in, right? The reality is the update came in on August 5th, which was here, and you had pumped going into it, right? Regardless of what happens afterwards, right? I'm actually kind of surprised that we didn't dump afterwards, but probably pumped because it went off without a hitch. I remember that it went off without a hitch, but we pumped going into it. That's the main thing that I'm trying to focus on. Is that was a very big update back then, and we pumped. Look at the pace that we pumped here going into that update. That was phenomenal. December is whenever this next massive update Fusaka is expected to come in, and I don't know when in December. So let's just say December 15th. Let's put it right in the middle. We're probably going to rally at various points. We'll consolidate whatever. We're probably going to rally going into December. We'll be at like $10,000 or more by the end of December. And then for Ethereum, I mean, hell, if the update goes well, cool. Then we'll probably rally. There's definitely some things that I'm concerned with, and I'm curious to see how it all goes. I hope it goes well. It's designed to tackle, this update is designed to tackle one of Ethereum's biggest hurdles, data availability for rollups. The scaling solutions that bundle many transactions together before settling them on Ethereum. So the data availability is tied up because of all the validating that goes on, right? And if we go here, the centerpiece of the upgrade is a technique called peer data availability, peer DAS. Data availability sampling, sorry. Instead of requiring every Ethereum validator to download all transaction data, peer DAS allows them to verify blocks by sampling smaller pieces, right? It's like what's the word I'm looking for? Quality check, quality assurance, right? That's what it is. Vanek explained, but in the form of the ledger, Vanek explained that this reduces bandwidth and storage demands because instead of doing it for every single transaction, for all the data there, it's just verifying smaller. They're sampling smaller pieces, and I would assume at random, right? Be like, okay, this and that's kind of where it gets me a little sketched out. It's like, what if there are flaws and they go unchecked? Like I don't know. I don't know how it's going to work out, but I'm not a computer nerd. I don't really understand how it all works in essence. I'm sure these guys know what they're doing, right? Ethereum's number 2 for a reason. This matters because Ethereum developers have already doubled blob limits once this year, and demand continues to rise. Yes, Coinbase's and WorldCoin's WorldChain now account for 60% of the roll-up data submitted, showing how central L2s have become to the network's growth. By expanding capacity further, Fusaka is expected to cut costs for rollups. Yeah, which is nice. What else was there? There was something with Matic, with what's it called? Not Matic, with Polygon. Let me just read here. Did I miss it? Did I miss it? There's something to do with Polygon. Is it on this article or is it a different article? Let me see here. I'm not seeing it. Might have been a different article and I skipped through it. Let's actually go back real quick. Oh yeah, it was definitely with this, actually. It was with these 300 billion. I didn't read I read the article, I just didn't read through it. So let's see. Where was it? Where is it? That's okay. I swear it was from here. Because I did read this whole, was it the article before? It wouldn't be the article, it would have been this one, I think. Let me just read through this real quick, guys, and if not, we'll just end the video. Or we're not going to end the video. I'll give some closing thoughts, but then we'll end it. Something about Polygon. I forget how to search on here for Polygon. If any of you are seeing it and I'm just skipping over it, that's sad. There was something big with Polygon, and I wanted to go over the price action with Polygon because of that. I can't find it. And that's okay. That's okay, but there's something bullish. I wanted to say it was with stablecoins, but where Polygon is responsible for like a majority of the transactions that are done. Would it be I'm pretty sure it's something to do with stablecoins. Maybe I deleted it. I don't know what article I would have deleted. Oh, okay, it was this article. It was definitely this article. Hold on. I say definitely. I thought it was the other one. Um, let's see. Okay, today Polygon processes nearly half of all USDC transfers, which I didn't know. Okay, in the range of $100 to $1,000 range. So Polygon is responsible for that for USDC. USDC is an upcoming stablecoin. Totally skipped over this. Um, and because of that, I would assume Polygon is primed and ready to see more of that kind of transactions like throughput on ramping onto their ecosystem. And because of that, I would think that that's going to add a lot of value as well. Stablecoins are a big deal, and Polygon being a very large proponent of why USDC is able to transact, and USDC is definitely the up and coming stablecoin. I think we're at a very low point here for Polygon, and we're probably going to rip through the roof. Not financial advice, not a financial advisor, but here at 23 cents, you guys, I wouldn't be surprised if Polygon pulled a move that just took it all the way up to 90 cents to $1.20 here pretty damn soon and beyond. I absolutely expect that Polygon is going to see new all-time highs this cycle, $6.55 to $18, and maybe even beyond that, honestly. That would give you something on the lines of like a 29x to a 75x. And I know that sounds crazy because Polygon, sorry, is at a $2 billion valuation now, but this thing could do a 10x no problem. That put you at 20 billion. 100x puts you at 200 billion. This thing absolutely has. I believe Polygon is a multi-$100 billion market cap coin, and with that, you could even see larger than an $18 price. You could hit 40, $56, like crazy things, you guys, because of its association with various things, but especially the stable coins. Anyways, I got nothing else for you guys. I hope you enjoyed the video. If you did, hit the like button, subscribe. Sorry, I got a little bit distracted at the end there. We went over a lot of, I feel like, very key talking points relative to the crypto markets here over the coming weeks. And the most important thing, I think, out of all this that we can take away is probably security, right? That's the most important thing that we talked about is security. Yes, the markets are booming. Yes, there's all this adoption and integration going on. Key figures like the senior advisor for the SEC getting put into the CFTC chair, taxes and stuff like that being more appropriate for crypto companies, all kinds of great things that are happening. A little competition between Ethereum and Solana. Life is great with competition, but you're not going to be a part of any of it, or it matters not if you're a part of any of it if you get scammed. Be safe with your funds. Keep it secret. Keep it safe. And nobody needs to know. Nobody needs to know, man. Nobody needs to know where you keep your private keys, unless it's like your wife, and in case like in case you die, something like that, right? Like my wife knows where our private keys are, but nobody else does. Actually, there's one other person who does, but I'm not going to say that person's name, just to also out of privacy and security, right? But in case anything happens to me, there needs to be people who have access to this stuff. Keep those ideas in mind, because it's never an idea that you think about, but it's something you should think about. You should think about the worst things, because not because you're worried about them happening, but because if they do happen and you're not prepared for them, this is all for naught. It's all for naught. So keep yourself safe. Thoroughly put in multiple layers of authentication. I got nothing else for you guys. Hit the like button, subscribe. Take care of yourselves, right? And good luck, everybody. Bye bye.